Welcome back, traders. This is my market outlook on index futures for the week of July 6th. Starting with S&P on the weekly chart, last couple of weeks we've made new all-time highs. Now at all-time highs, it gets a little bit difficult to trade because we still want to maintain our bullish bias, but we don't have any obvious upside targets to aim for. So we'll have to rely on projections. Now, looking at the weekly chart, I don't see any obvious swings to do projections on, so we'll save that and deal with projections later on when we go down to the daily chart. So then what on the weekly am I keeping my eyes on, and where would I change my bias? Well, taking a look at the chart, this candle used this weekly inversion fair value gap to bounce price up for new all-time highs. So this low is going to be significant, and if it gets taken out, then I would be looking for lower prices. Now, looking at the past couple of months, we do have a couple of weekly fair value gaps. If you take a look closely, you can see that there are two fair value gaps, but they overlap right here with a small volume imbalance. Now, you could go ahead and draw one big fair value gap using this candle's high and this candle's low, but I went ahead and just drew these out individually, and where they overlap here, I'll know that that is where the weekly volume balance is. So I'm keeping my eyes on these fair value gaps going into this week. Overall, the bias is bullish. However, it's perfectly reasonable to expect a little bit of a pullback into these inefficiencies. It can be quick, with 1 or 2 days pulling back into this fair value gap, and then we rally up for new all-time highs sometime later in the week. Or it can be a slow and steady grind back into this fair value gap, and then we close somewhere at the end of the week within this inefficiency. So make sure you pay attention to the opening price on Sunday and have that drawn on your chart throughout this entire week. Now, moving on to the daily, I'm going to go ahead and zoom in here in a little bit, but make sure you take note of this old daily fair value gap. I've extended it all the way to the current price action, so you'll see that once I zoom in. So zoomed in, let's first talk about projections. Now I'm using this low, which is that significant low that started this whole rally for all-time highs. And then I'm also using this high, which is the high of this consolidation. And using that as the projection, we have -1 standard deviation here that was hit late last week. So the next upside target that we will look for is -1.5 or -2 standard deviation if we get a strong rally. But like I said on the weekly, it's reasonable to expect a little bit of retracement, especially when we have all of these inefficiencies here on the daily chart. Now, this orange is that old daily fair value gap that I have extended all the way to here. And as you can see, it's right in the middle of these weekly fair value gaps. Also, there's this daily fair value gap that I highlighted in green. It's in the upper half of the orange. So there's a lot of confluences here. I think price will be hard pressed to go below these price levels. Of course, not impossible to go below here, but if we do, I would be inclined to think that price will want to go into consolidation mode and work within these weekly fair value gaps for quite a while, maybe 2 to 4 weeks. And of course, if this low gets taken out, then I will be looking for lower prices, namely this low and this liquidity void. Moving on to Nasdaq on the weekly chart. Same story as ES, we're at new all-time highs, bullish bias, need to use projections for targeting, but it is reasonable to expect some retracement. Now, again, I am using this low as the turning point for changing my bias. If we take out this low, then I will aim for this obvious fair value gap, but only if we take out this low. If that doesn't happen, I will still have a bullish bias, thinking that we may go higher. Now, taking a closer look, still on the weekly, same as S&P, we have these two weekly fair value gaps, and they overlap with a volume imbalance. Now, I'm expecting price to retrace back into here this week. It could be a quick 1 or 2 days, and then we rally for new highs, or a slow, grindy retracement and close the week somewhere in this inefficiency. Now, we'll get a little bit more details in the daily chart, but I want to mention again to keep an eye on this week's opening price. I think it will give you a huge clue as to how the price action will play out going into this week. So finally on the daily, take note of this old daily fair value gap as I'm extending it all the way to the current price action. And now zooming in, you already know how I feel about this low. So I want to just go ahead and focus on all of these inefficiencies. There's a lot of overlap here and it looks kind of messy, so I'll try to be as clear as possible. So starting with the blue, these are the weekly fair value gaps I'm expecting price to retrace back into. However, looking at the daily, I'm not so thrilled with this higher, smaller weekly fair value gap because it's already kind of done a lot of work in here and it looks pretty balanced to me. So if there's going to be any retracement, I would think price will want to go for this larger weekly fair value gaps, especially with the sell side liquidity below this swing low. So I'm just gonna go ahead and get rid of this smaller one. I think price will want to go down here and pick up all these sell orders. If we do go lower, we have this old daily fair value gap in orange. We used it once before right here as resistance, and then now that we traded through it, I'm looking for it to act as inversion and trade as support. If we're going to continue being bullish, I would like only to see the upper half of this inversion fair value gap to get traded to. Now, one last confluence. This green fair value gap here is a daily fair value gap. This whole run up, you can see that this fair value gap is the largest one, and the upper half lines up with that orange inversion fair value gap. So ideally, price will not trade below into the lower half of this green fair value gap. That will also be below the orange inversion fair value gap, which I don't want to see as well. It would be nice if we just hit the top of this daily BISI and then we rally up higher for new all-time highs. So you can pretty much consider this daily fair value gap in green to be my last line of defense for bullishness. If we don't respect this, then I would think price may go into a prolonged consolidation, but I won't be bearish until we take out this low. And should that happen, I already told you what my lower targets would be. So I hope with all of this, you have a good idea on what you want to look for going into the market this week. Now, I didn't go over the economic calendar, but make sure you take a look at it yourself and note any high impact news. Now, if you enjoy this or find any of this insightful, please leave this video a like or give me a comment and let me know what you think is going to happen in the market. Also, make sure to subscribe, and until I see you guys next time, safe trading.